there you have it, the closing bell at the New York Stock Exchange, signaling the end of another trading day, a relatively flat day across the board. The Dow Jones had one of those up and down days where it finished the trading session pretty close to even, down about 48 points.
Well, the S&P and the NASDAQ also closed the day relatively flat. And joining us now is Aaron Weinman. He is a finance correspondent for Insider. Aaron, thanks very much for being with us. So we had seen a relatively bumpy road in recent weeks for the markets, but what was driving the markets today?
Yeah, I think that today's major talking point, as you're probably aware, was Fed Chairman Jay Powell's appearance in front of the Senate Banking Committee. I think it was expected, and the Fed's, as we know, doing what it can to tame inflation without trying to engineer a recession, if you like. And at the heart of what Powell was discussing today, and at the heart of what's going on here, really, it's bringing consumer prices under control. And as a result, I think it's almost inevitable that there's going to be an economic downturn. And, if the headlines are anything to suggest, a recession is probably not far away as well, even if it is a technical recession.
So, I realize that Wall Street is more concerned with the Fed in terms of its sort of day-to-day trading machinations. But, for instance, the president today called for a 3-month suspension of federal gasoline and diesel taxes. Was something like that a blip at all on the markets, considering whether this would be beneficial for consumers or perhaps just a Band-Aid? Did that have any effect?
I think it is partly a Band-Aid. And, I didn't mention this earlier, but there are factors here that are out of the president and Chairman Powell's control, those being the ongoing war or conflict, if you like, in Ukraine, and the impact that is having on energy prices around the world. And that is, as you're aware, having a domino effect onto the amount of money that one pays for gas and petrol at the pump. So with the cost of petrol hovering around the levels we've never seen before, you can understand the logic in President Biden's decision. But it is debatable about how much of an impact this will have on spending for consumers. Is it a Band-Aid? Most likely, yes. And if I'm not mistaken, it's roughly 18 cents a gallon cheaper for petrol and 24 cents cheaper for diesel. Sorry, I should say gasoline for Americans. There is an argument that, it will provide temporary relief for consumers, but then there is an argument that this is also a bit of politics. Democrats have got quite a fight on their hands to hold on to their majority in the upcoming midterms, and Biden's handling of economic policy is playing a big role in voters' decision-making. Also, with that in mind, I think there's a question of whether this will actually help the supply-demand imbalance currently at play with oil and gas. There are American fuel and petrochemical manufacturers have said that a gas holiday would provide near-term relief, but I think at the heart of the matter here is whether the imbalance in supply and demand for petroleum products will actually be fixed.
Well, Aaron, you mentioned that appearance by the Federal Reserve Chair Jerome Powell at that Senate hearing earlier today. And during that, he did say that an impending recession would be a, quote, possibility. He acknowledged a soft landing would be, in his words, quote, very challenging to achieve. On this topic of a recession, is there any indication if a recession takes place, how deep it actually might be?
That's a difficult question to answer, but I think if we were to look at a recession as it is right now, companies are definitely in a much better place than they were last time we were in a recessionary environment. And what I mean by that is we've had cheap money, for example, that's come through for a lot of years, and a lot of companies, blue chip corporations, even leveraged borrowers as well, were able to utilize those low rates and refinance debt or improve their capital structures to ensure that they are not as impacted by this rising rate environment. However, from a recession perspective, there will no doubt be an absolute slowdown, because the goal here is to cool the economy down, and that will have an impact on consumer spending. Consumers will spend less, and this could have a really severe, maybe not severe, that's a bit of a severe word, but I think it is a bit aggressive to say that companies, say for example in entertainment, leisure, perhaps travel, and any industry that's very directly correlated to the consumer will feel the recession more than other sectors. I think if you look at where rates are headed and the fact that financial conditions are likely to tighten further, consumer sentiment, as I mentioned, it is souring. And as we discussed earlier, energy and food supply distortions have worsened and global growth has also deteriorated. So I guess, long story short, with rapidly slowing growth momentum and a Fed that's committed to restoring price stability, I think it's very, very likely that a mild recession will start at the back end of this year, perhaps the fourth quarter, maybe early next year. Just going back to my earlier points, however, if I may, about the balance sheets of companies, it's important to note that there are excess savings and consumer balance sheets are also better than we were, say, the last time we were in a recessionary environment. So this, I do think, will mitigate or will help mitigate the speed of economic contraction. But I think monetary and fiscal policy will be constrained by the higher inflationary environment that we are currently in.
All right. Well, Aaron Weinman, thank you so much for joining us. We certainly appreciate your insight.
Thank you so much for having me.